Welcome back to our Hong Kong versus Dubai series. In part 1, we covered setup processes, business account realities, and market access. Today in part 2, we will explore tax structures, operational costs, and long-term considerations that could impact your business for years to come. Hi, I'm Axel from Statrys. Let's get started. Let's start with taxation, often the number one factor when choosing a jurisdiction. Hong Kong runs one of the world's most straightforward tax systems. Corporate profits follow a two-tier structure. 8.25% on your first 2 million Hong Kong dollars in profits, that's about 255,000 US dollars, then 16.5% above that. There is no capital gains tax, no GST or VAT, and foreign-sourced income can qualify for 0% tax provided all profit-generating activities take place outside Hong Kong. This is an important consideration we have covered in previous videos, which we will link below so you can understand if you might be eligible. This system has stayed consistent for decades, backed by over 40 double taxation treaties that benefit international businesses. Dubai's tax landscape tells a different story. The tax environment has changed rapidly in recent years. Many entrepreneurs set up in what is called a free zone, a special economic area designed to attract foreign businesses where you can enjoy 100% foreign ownership and faster setup. Free zone companies may still qualify for 0% corporate tax, but only if they meet economic substance requirements. In simple terms, proving you have genuine operations within the free zone, such as staff, offices, or management making decisions locally. If these requirements aren't met, the 0% rate does not apply, and the company will be taxed at the standard 9% corporate tax rate, the same as mainland companies. For companies on the mainland, meaning outside the free zones and across the wider UAE, the rules are straightforward. Profits above 375,000 dirhams, which is about 102,000 US dollars, are taxed at 9%. There is still no personal income tax, but most business transactions are subject to a 5% VAT. Here's what matters. Dubai tax rules are still being written. Economic substance requirements are tightening, and the framework will likely keep evolving. The key difference is stability. Hong Kong's tax system is long established and highly predictable. Dubai's framework is newer, evolving, and subject to ongoing change. If you want certainty, Hong Kong has the edge. If you're optimizing for potentially lower effective tax rates and you can meet the substance requirements, Dubai's free zones may be attractive. Next, let's talk about the day-to-day realities for entrepreneurs who plan to live and run their businesses locally. Hong Kong comes with a high price tag. Office space for small companies typically ranges from 15,000 to 50,000 Hong Kong dollars per month. That's about 1,900 to 6,400 US dollars. Salaries here are around 20 to 30% higher than other regional hubs, reflecting its competitive talent market. On the bright side, Hong Kong offers world-class infrastructure, excellent logistics, and a time zone perfectly aligned with Asian trade activities. Dubai offers a different mix of costs. Renting office space in the free zones can range from 20,000 dirhams to 100,000 dirhams annually. That's around 5,400 to 27,200 US dollars. Salaries are competitive, though staff visa requirements add administrative complexity and cost. Generally, 3,000 dirhams to 10,000 dirhams per employee per year. That's 800 to 2,700 US dollars. Like Hong Kong, Dubai boasts excellent logistics and a strategic position for intercontinental trade. However, businesses face additional ongoing paperwork and visa management, which can become a significant part of daily operation. In short, both cities offer excellent connectivity and infrastructure, but their challenges differ. Hong Kong leans toward higher financial overheads, while Dubai demands more administrative effort, especially if you plan to live and operate actively in the city. Hong Kong continues strengthening its role as the bridge between China and international markets, particularly through Greater Bay Area integration. The regulatory environment remains stable, with established legal frameworks that international investors understand and trust. Dubai is positioning itself as a global hub for innovation, trade, and emerging technologies. Heavy investment in crypto, blockchain, and digital finance, combined with aggressive business attraction policies, supports its growth as an international business center. However, the regulatory environment continues evolving, which creates both opportunities and uncertainties for long-term planning. In short, Hong Kong's future is closely tied to China and Asia economic growth. Dubai's trajectory depends on its success in global innovation and maintaining competitive tax policies. So, how do you choose between these two jurisdictions? Choose Hong Kong if your primary markets are in China or Asia. It's a stronger option if you need established business account relationships, regulatory stability, and mature financial services infrastructure. Hong Kong also makes sense if you value predictable compliance requirements and long-term legal certainty. Choose Dubai if your focus is on the Middle East, Africa, or South Asia. It's a better fit if rapid setup and potential tax advantages are priorities, or if your business is built around logistics, trading, or intercontinental operations. Dubai works well if you can adapt to evolving regulations and are comfortable managing higher administrative complexity in exchange for greater flexibility. At Statrys, we help foreign entrepreneurs incorporate companies in Hong Kong, open business accounts for international operations, and stay on top of ongoing compliance. We understand the challenges foreign entrepreneurs face with traditional institutions. That's why our multi-currency business accounts are built to support business working across regions and currencies. Ready to explore Hong Kong incorporation for your business? Visit Statrys.com and click Get Started to begin today. And if you have any questions, reach out via live chat, WhatsApp, or email us at support@statrys.com. Thanks for watching.